Welcome to a Purple Chips tutorial for when to buy. I'm John Schwinghamer, the author of Purple Chips, published by John Wiley & Sons and available everywhere. Now please pause your screen so that you can read our disclaimer. Thank you very much. Now today in the when to buy tutorial, what I'd like to show you is when and where to buy a Purple Chip stock. And really the base of Purple Chips is that stock prices follow the shape of the earnings curve, and I'm going to show you that today and how to choose the entry points and where to buy. There's really three main things, and I'll show you some examples shortly. You have to use at least the last 2-3 years of the stock's trading range. Then you take the earnings per share line, the EPS line, and you overlay it on the low of the trading range. That's how you determine where your entry point is. The low valuation, which is the low risk entry point, is where you want to buy, and that's where the EPS line ends up on the stock price scale. Now let's go into an example I'm going to show you on our screen here. We're going to use Becton Dickinson, and then we're going to use Oracle. So here we have the actual chart of Becton Dickinson as we stand here. Today it's November 29, 2012. So Becton Dickinson is trading at 77.60. And the market's going to open in about 10 minutes. So that's where it closed on November 28th, actually. And you can see the earnings per share line, very nice earnings per share line. The white heavy line is the earnings per share line. And basically the stock trading range follows the shape of the earnings per share line. Now, the way that you use this is, in my case, I can grab this line on this system that I have here, and I'm going to move it, and you can see, you notice how the earnings per share line is actually following the bottoms, okay? And I'm going to take the little drawing pen. You see how it's on the bottoms there? Okay, it's following the bottoms of the trading ranges. Which is the premise for Purple Chips, is that this earnings per share line dictates the range in valuations. So you take the last 2 or 3 years of a stock's trading range, which would be this period here, okay, and we're using that to estimate where the stock's trading range or the valuation range should be. So what I'm going to do is I'm just going to erase this here, and essentially by using the earnings per share line, I'm just tracing it here, and I'm going to say that in the case of Becton Dickinson, if I move that earnings per share line up, it's going to be somewhere close to $90, and on the bottom, okay, that earnings per share line would look something like this, and that means that you'd want to buy Becton Dickinson. The low end of the range would be at, let's say, around $73, $74. And on the high end of the range, where you would take your profits, would be around $88, maybe $90. So now what I'm going to do is I'm just going to erase that. I'm going to grab the earnings per share line, okay, and you can see this matches with the bottoms, okay, for the last 2-3 years. And this is approximately where the high end of the trading range would be. So that's the valuation range, okay, and that's where your entry point is, that's where your exit point is. Now, let's move to a second example. I'm going to use Oracle in this case. So for Oracle, you see, again, we have a very nice earnings pattern, and this is a very good example here. So I move the earnings per share line down to the recent low, okay, and I'll show you the recent low is over here. So that tells me that my entry point, if I was going to buy Oracle anytime soon, based on the current shape of the earnings per share line, I would be buying Oracle at $28. If Oracle was to move up, then what I would be looking for is for Oracle, I would be selling Oracle somewhere north of $38. And that corresponds with the high valuations that we've seen here. So that's the base of the Purple Chips model, is that the earnings per share line is essentially telling you what the shape of the trading range will be. And that is the key. So once you understand that, then you can actually choose your entry points, your low-risk entry points, and your points for taking profits. That's how Purple Chips works. So you find good quality stocks, and then you determine those points. So So that's how it works. Now the last point that I want to make is that the earnings per share line, depending on the shape, it's going to tell you where your entry and exit points are. But also be aware that, excuse me for 1 second, be aware that if the shape of the earnings per share, let's say that the earnings per share flattens out, then what will happen is, let's say if this curve was to go, instead of going up like that, if it went like that, then your entry point is going to get lower and your exit point gets lower too. Now, if the earnings per share line was to go higher, let's say like that, and if earnings accelerated, it means that your selling target actually gets higher and your entry point would get higher too, because it would follow the shape, the new shape, the evolving shape of the earnings per share line. So that's all for today. That concludes today's When to Buy tutorial. I'm John Schwinghamer, the author of Purple Chips, and thank you for watching.